And because they've got a lot of margin, they're using that as a weapon. Even though they cut prices 6 times this year, they still in the first quarter delivered more margin than anybody else in the industry.
What do you make of this whole idea of these shareholders? And we've had a bunch of them even come on the program now.
Yeah.
Who signed this letter saying, look, you're doing too much, Elon. It's just too much. What do you think of that?
I don't think he's all that distracted away from the business. Like on the earnings call, he was answering questions at a really deep level, like on how the C++ neural nets work.
Right.
Like he's involved, and he has always had a lot going on, but he is incredible at managing his schedule and staying involved on the absolutely key topics.
In this video, Tesla's biggest weapon, their closest so-called competitors, and whether or not they represent a genuine threat to Tesla. I think you know my answer to that. And some overall thoughts and new research around Tesla, electric vehicles, the Chinese EV market, the future global electric vehicle market, and loads more. And in case you missed it, I posted a fascinating subscriber-only video on Twitter yesterday featuring Sandy Munro, some very interesting disclosures, and some overall thoughts around business, growth, and fulfillment. Plus, I'll be dropping a monstrous video over on Patreon soon as well. If you're not on Twitter and Patreon, you are definitely missing out. You want to join either? Click the links in the pinned comment.
What do you make of this whole idea of these shareholders? And we've had a bunch of them even come on the program now.
Yeah.
Who signed this letter saying, look, you're doing too much, Elon. It's just too much. What do you think of that?
I don't think he's all that distracted away from the business. Like on the earnings call, he was answering questions at a really deep level, like on how the C++ neural nets work.
Right.
Like he's involved, and he has always had a lot going on, but he is incredible at managing his schedule and staying involved on the absolutely key topics.
Now, I don't know exactly which Tesla shareholders signed this letter, crying about Elon Musk apparently being distracted. I suspect they're all managing money for other people, and they might be mad that the stock's down, which has nothing to do with whether or not Elon's distracted. It has everything to do with the buying and selling activity of investors, all participants in the stock market, buying and selling Tesla stock. That's how it works. But just because a bunch of investors have a tantrum and sign a letter doesn't mean that they're right. Elon ain't distracted. You might have noticed. He's been simultaneously running Tesla and SpaceX for the better part of 2 decades. No one seemed to be complaining that Elon was distracted back in 2006, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20 or 21. But today suddenly he's distracted. Founding member of OpenAI, I think back in 2014, Boring Company, Neuralink. Elon is not distracted. And the reason that these investors have signed a letter is because they're butthurt about Tesla stock being down. They're looking for somebody to blame. I highly recommend these so-called investors just don't own Tesla stock. If it bothers you that Elon is capable of doing more things in his personal life and his business life than you could do, don't own Tesla stock. If any time Tesla stock is lower than you'd like it to be, you start pointing the finger, or worse, in the case of these morons, claiming suddenly now Elon's distracted, but he wasn't 2 years ago, 3 years ago, 5 years ago, 7 years ago, 10 years ago. You are hallucinating. You are overcome by emotions, and you're probably not cut out to own Tesla stock. It's going to be a bumpy ride. It's always been a bumpy ride. You can't handle it. Get off the ride.
And you see, like they are still delivering more cars than they've ever delivered. I think anybody in the car business would love a 36 comp on a quarter. And he's got a lot of margin to play with.
By the way, I don't disagree with you. What I can't figure out is, let's say he was paying more attention. What would the result be?
Yeah, what would you do about the general economic environment?
Right.
Exactly.
Exactly. These guys get it. What more could he do? Nada. The idea that Elon's distracted, asinine. That'd be almost as dumb as claiming I'm distracted because I'm making content exclusively on Patreon. And now for Twitter subscribers. Stephen, you're distracted. I can prove it. You're not making daily YouTube videos anymore. Oh wait, you are. Wait, but you're still distracted because you're doing too many things. I couldn't do it, so you must be distracted. By the way, I am a busy boy. Not even close to Elon, but doing multiple things at the same time does not automatically mean you're distracted. Tesla continues to execute near flawlessly, as does SpaceX. Neuralink's still chugging along, so too the Boring Company. And you may not have noticed, but the burning dumpster fire that was Twitter, with 20% of its prior workforce, has improved in leaps and bounds and become an incredibly interesting, much better service, and they're still just getting started on the improvements. In short, Elon is not distracted. The investors claiming he is are deluded.
And because they've got a lot of margin, they're using that as a weapon. Even though they cut prices 6 times this year, they still in the first quarter delivered more margin than anybody else in the industry.
This guy's hurting my feelings with his facts. Does anyone know his boss's phone number so I can get him cancelled so he can't hurt my feelings anymore with facts? I don't like it.
Are you a believer, though, there is this other issue, which is, he's made a lot of promises to not just the shareholders, but frankly to customers who bought the vehicles thinking that they're getting autonomous driving,
right,
full self-drive, all sorts of different component parts of the product that have not come to fruition. I say that somewhat politely because I do know some owners of these cars that are genuinely upset because they think they were sold a bill of goods.
Yeah, I think he is good at delivering eventually on promises, but not on time on his promises. And that's got to be frustrating for customers. And I think now you see competition coming both on the EV side and on the autonomous vehicle side.
Right.
And I think they're feeling that competition for sure.
But one of the things you heard this year was he said, look, by the end of this year, I think we're going to have full autonomous driving, and that's where we're going to make it up on the margin, right?
Yes.
He thinks that he's saying, look, we'll take a lower margin today because I'm going to be able to really get margin later.
Right.
And I think there's some investors, at minimum, who are saying, are you really going to be able to get margin later? Because A, there's all of these other car companies that are doing EVs that are going to try to take your margin, and B, is this full self-driving thing, robo-taxis, and all the ways you think you're capturing this margin in the future, is that a realistic future?
Yeah, I think that's what he's asking you to believe as an investor is, can you make this up in the future with software revenues and other revenues that are going to come in off the car? That's what you're being asked to believe as an investor.
And I'm asking you where you would land on that.
I think the market is kind of speaking on that. I think in the long term, this is a huge market. They're a market leader. They've got market leading margins. And so as an investor, you're investing into a space that could be 10 times larger, literally in 5 years than it is today.
Nail on the head. Huge opportunity here. Many investors don't believe it's ever going to happen. Many are skeptical. And people are entitled to believe or not believe, to doubt. That's up to them. I personally believe, with a very high level of conviction, that there's no second place in terms of a generalized solution to autonomy. It's important to make the distinction between a localized, handheld version in which you are required to pre-map the entire area in high definition, use expensive LiDAR to bounce a signal off objects to make sure nothing's changed versus your pre-mapped area, and to geofence. In other words, the supposed autonomous competitors to Tesla all need their handheld and guardrails. Tesla does not. Most people don't have a deep enough understanding of what's going on with the technology to make this distinction, but it's a really important one. Time's going to tell. My money's on Tesla. Literally. All of it. And then some.
So even with...
But as an automobile company or as this other thing? Because right now it's still... To capture this type of valuation, even this valuation, you have to believe it's something else.
That's right, because they're valued at 10x their competition. And so you've got to believe that there's something else, and that competition is coming now with autonomous vehicles.
Okay, but so you used to work with this guy,
Yeah.
So is there something else?
There is a lot of capability to deliver margins off of that platform, those cars. But GM's got a very similar strategy and a very similar capability, and others do too. Right. So this space becomes more crowded for sure.
I have one question about, not the distraction piece, but the ecosystem that is Elon, which is to say, one of the things you keep hearing about is, so he has Twitter, he's now talking about doing generative AI, he's got SpaceX. There is this sense that, and he owns Twitter outright, as a private company, Twitter, Tesla, public company, SpaceX, private company, but lots of investors in there.
Yeah.
He does move these engineers around from place to place to place to place to help in specific moments. There was a period of time where we heard that a lot of Tesla engineers were showing up on the doorstep of Twitter to try to assess what's really happening. Folks at SpaceX, now in the whole generative AI situation, how that's... And he's got a lot of AI folks inside Tesla that he's going to want to use in other places. How should a shareholder feel about that? In the sort of normal context, there would be people who would say, no. That guy works for you over here. He does not work for you over here.
It drives, believe it or not, some massive breakthroughs. There are SpaceX metallurgy engineers, materials engineers who've really transformed the way the Model Y gets produced.
Right.
And so you get these big breakthroughs by moving that talent and context switching them. So yeah, I can understand one side of the story where investors are upset. The other side of the story that doesn't really get told is how much value they add back to Tesla as they come in and help.
Fantastic point. And just a quick note, again, to the investors out there who may get a little bit butthurt if resources are moving between companies. I highly recommend just don't own the fucking stock. Problem solved. And now on to a new research note from Morgan Stanley discussing Tesla, the electric vehicle market, and believe it or not, Tesla's actual biggest threat, which isn't really saying a lot. And surprisingly, I find myself agreeing with just about every word in this research note. This might be a first. Does your Tesla model make room for Chinese EV competition? Why yes it does. Thanks for asking, Morgan Stanley. Still a $200 price target. For years, China EV demand exceeded supply, allowing domestic brands to engage in a battle of the fittest within their home market as their products got cheaper and better. Slowing China EV sales and a gloves-are-off pricing posture from Tesla has accelerated the dawn of the Chinese export model. That's right, ladies and gentlemen, the Chinese EV invasion is underway, as predicted and discussed repeatedly over the last few years. And it ain't just me who's been pointing this out. Sandy Munro's been banging the drum on this obvious outcome as well. The message from our China Autos team is clear. Chinese EVs are coming to Western markets. No shit, Sherlock. Asia remained the key market for China's vehicle exports in the first quarter of 2023, but sales to Europe registered decent growth, echoing the momentum of battery electric vehicle exports. Compared to 2022, when Asia made up about 36% of total sales, followed by Europe's 25% and Latin America's 24%, we think sales to Europe, both export and eventually locally sourced, will continue to climb in the following quarters, powered by cost-competitive EVs from China. By the way, they're right. The topic has not escaped the attention of European auto industry executives. We are looking for a 45% year-over-year increase in China's net vehicle exports in 2023 to around 3.3 million units, assuming import volume similar to 2022. With local competition heating up and domestic markets showing early signs of saturation, OEMs, traditional brands in particular, are actively seeking overseas opportunities to breathe new life into their incumbent model lineups. By the way, guys, we'll talk more about this in a moment. Big implications. We are prepared for China EV exports to go higher, given 1, lower electric vehicle penetration overseas relative to China, and 2, great model variety with superior price-performance ratio and improving brand equity, and 3, low price materials like batteries and falling logistics costs in 2023. Now, you guys might recall, I've described what the future automotive market will look like in about a decade's time, and it looks like this. Number 1, by vehicles sold, Tesla. Number 2, 3, 4, 5, 6, 7, 8, 9, and 10, a bunch of Chinese electric vehicle makers, and maybe, if you're lucky, one of the top 10 might somehow, maybe, be a legacy automotive manufacturer who somehow survive and have probably merged with a bunch of other legacy auto companies along the way. Tesla has an unassailable lead on technology, on cost. They will be number 1. They've already won the decade. Now, I know this sounds hyperbolic, and the reason I'm so hyperbolic is so I can clip this in 10 years' time when it's played out and say, well, I was never in doubt. But Tesla's so-called competition, legacy automotive manufacturers, needn't worry about Tesla. They'll never catch them. They should be shitting their pants, however, at the very thought of having their lunch eaten by Chinese EV makers, because that's exactly what's going to happen. There are some great electric vehicles in China, and importantly, as Morgan Stanley points out, with superior price performance, it's difficult for a legacy OEM to compete with a mature electric vehicle company from China with much lower labor costs, many lower part and component costs, and years of experience producing electric vehicles. Now, at this point in time, many companies in China are competing so much on price that they're losing insane amounts of money trying to grab market share. But the point here, many of these companies have been producing electric vehicles at reasonable scale for years. Meanwhile, the likes of Ford, GM, Volkswagen, etc., and especially Toyota, have barely even begun. So make no mistake, ladies and gentlemen, the future of the automotive market is number 1, Tesla. The rest of the top 10, mostly Chinese electric vehicle companies. Most legacy OEMs will go bankrupt between now and then. They're too late to the party. I don't think most people have figured this out yet. We view the growing presence of made-in-China EVs in Europe and even North America as a question of when, not if. Makes 2 of us, Morgan Stanley. By the way, this may be the most I've agreed with Morgan Stanley in any of their research notes ever. 1. Chinese OEMs are moving into Europe. The pace of media news flow and investor interest in Chinese automakers exporting their primarily electric vehicle products into Europe has accelerated rapidly in recent months. Leveraging data from S&P Global, we show that the growth of Chinese automotive imports into Europe has already been substantial and may account for around 20% of all European imports by the end of this year, up from around 1% 5 years ago. Take a moment, let that sink in. A 20-fold increase in about half a decade. Some of this rise in Chinese imports is from Chinese-owned Western brands such as MG, and some from Chinese-made Teslas, which we'd expect to be substituted for locally produced cars now that the Berlin Gigafactory is online. However, a number of Chinese auto brands themselves are now targeting Europe as an area for growth. Chinese manufacturer BYD has already unveiled a number of products it intends to launch in Europe, with the €38,000 Atto 3 and the €30,000 Dolphin both coming soon. Significance to Tesla. Tesla's market share in the EU has come down as the market size has increased. Oh, really? I didn't know that would happen. Just trolling, obviously. This is math. This tells us nothing. The entire market's growing, obviously. By default, more people producing EVs, lower market share for everyone. That's how it works. However, between 1, the Berlin plant continuing to ramp, and 2, China demand being muted in the short term. Yeah, for those who don't know, Chinese automotive market is literally imploding right now, especially ICE vehicles, but the entire market's getting absolutely fucked. Just goes to show Tesla's incredible products that they continue to sell through production. We see the potential for Tesla's reliance on Europe to increase. Although our European team sees European OEMs as having the highest risk of losing share due to less competitive product offerings and lower ability to compete on price, those are two massive understatements. The entrance of Chinese brands brings stronger competitors closer to Tesla. And quite a milestone here, China surpassed Germany as the second largest vehicle exporter in 2022. Japan still number 1, but not for long. If we just focus on China exports in blue, from 2019 and 2020 to 2021 and 2022, we notice a trend up. Meanwhile, what's happening to Japanese and German exports? The trend down. It's already underway. The data doesn't lie. Here's a chart from EV volumes with estimated, not verified, but estimated Tesla deliveries, US, China, Europe, and rest of world. This is a fairly stunning chart. Exhibit 3, gradually, then suddenly, Chinese exports of cars into Europe has spiked in recent years. What we're looking at, China-produced cars in terms of market share of total European light vehicle sales. From 2000 until 2019, a spec from 0% to 0.2%. But then out of absolutely fucking nowhere, from 2019 until the estimate for 2023, which will be close to 1 point, we see a surge, a 10x increase from 0.2% to 2.2% from 2019 to 2021. And another doubling approximately from 2021 to 2023 based on Morgan Stanley estimates. I mean, it's happening. The Chinese EV invasion is happening. How Chinese OEMs can be a real threat to anyone in the electric vehicle space. With core competencies in electric vehicles, the Chinese players could drive down the prices of electric vehicles in Europe. This is very important. They're right. They will. And again, how do legacy OEMs compete? If you can't make the best product, by the way, Tesla makes the best product. If you can't make the best product, you kind of have to compete on price. Well, have to compete on price performance at the lower end. But if you can't make a competitive vehicle and sell it profitably at the same price point a Chinese company can make a competitive, profitable vehicle, you are what we call f***ed. The local Chinese car market is extremely competitive from a price perspective, with a wide range of new entrants looking to lean in to cash burn and achieve scale. The byproduct of this appears to be limited price discipline and a very competitive electric vehicle market, especially at the mid-range price point. Considering this, OEMs in China may export price deflation into other car markets should they now look to divert their excess capacity to foreign markets. 2. Chinese products are substantially better equipped versus foreign competition in terms of infotainment and advanced driver assistance systems. This also is true and very important. From a driver's point of view, once you've already purchased the vehicle, which comes down to price performance, how much value it represents, and obviously affordability, things that matter include the software, as in the infotainment and the software that assists you with driving. Tesla, again, in a clear and dominant lead here, but number 2, 3, 4, 5, 6, 7, 8, 9, 10, all Chinese. Once again, I would just like to say, rest in f***ing peace, legacy automotive manufacturers. It was good while it lasted. If Chinese competition is able to undercut the domestic OEMs as a value proposition, spoiler alert, that's exactly what's going to happen, they may start to gain share and drive some ill discipline across mass market pricing, assuming legacy OEMs feel the need to reposition their offerings to lower price points. I mean, what else are they going to do? Not compete on price and not sell vehicles? 3. Chinese battery technology is advanced, as is their sourcing of raw materials and their electric vehicle supply chain. With a substantial head start in terms of battery technology and with healthy capacity in the region, we expect Chinese OEMs to have some fairly obvious cost advantages versus European peers. One obvious advantage could come from employee costs, which I mentioned earlier. As an example, BMW shows in its 2022 annual report a personnel cost per employee, holy shit, of around 95,000 euros. Chinese data against which to compare this is limited, but we'd expect the overall cost dynamic to be favourable. Talk about an understatement, bro. I don't know for sure, this is totally just guessing, but I reckon average cost per employee at a Chinese electric vehicle company is probably about 1/5 this amount. Worst case, probably about 1/3. Even if you want to be insanely generous, couldn't possibly be more than half. Exports can help capacity utilization, obviously. As the Chinese market becomes more saturated, Chinese OEMs and electric vehicles are likely to push into Europe with aggressively priced mid and premium offerings. We think the C-segment SUV could be a key battleground. It remains unclear if this will trigger a price war in Europe, and there are reasons to expect the pace of European adoption to be slow to begin with. Discussed next. Industry analysts can point to the example of the Japanese 1970s and 1980s and Korean 1990s and 2000s expansion into the US and European markets. Yes, this process took decades to play out. Yes, there are geopolitical considerations that make China auto company expansions into the West a more contested topic. In our view, we don't need to see China-made EVs arriving in the port of Los Angeles to begin having an impact on the US market. Even second derivative impacts, such as taking share in China and basically everywhere else on Earth, can put that added bit of pressure on the incumbents. In the world of global autos, excess capacity can be fungible in many varying forms. Significance to Tesla. We have yet to see another OEM that can truly rival Tesla with an EV that offers current, attractive unit economics. They are right. And this is important. The Tesla hegemony, established in the West, has made the company seemingly invulnerable to competition. Once again, they are right. Up to this point. Chinese OEMs are the first that may have a shot at disrupting the way investors view Tesla's EV dominance. Although we acknowledge that there are many factors contributing to Chinese OEMs gaining share in the home market, incentives, increased capacity from multiple players, etc., Tesla has been losing share in China since the peak in 2020. Oh god damn it, dude. Again. The whole share in market X, Y, or Z is not a metric that matters. How many vehicles are they selling? Period. Our message is that investors must get comfortable with Tesla sharing the EV sandbox with China in the quarters and years to come. True, again, top 10 automakers in a decade, it's going to be Tesla and a bunch of Chinese companies. Exhibit 4, Chinese OEMs rebounded and gained share in their home market after losing share to Tesla. Again, this is just totally irrelevant. These clowns are looking at electric vehicle market share, not vehicle market share. And they're not looking in absolute terms. It's all noise. A much more telling chart would be the number of actual vehicles sold by Tesla in China, in Europe, in pick your market. Percentage market share in a growing market is an absurd thing to even look at. It tells us nothing other than the market itself is growing. I guess if I keep scrolling, there'll be a note explaining that the sky's blue. Must be here somewhere. I've got to say, I'm very impressed. Morgan Stanley finally publishing some research with which I completely agree. They're right. Very right. And most people are unaware about this Chinese EV invasion, but mark my words, legacy automotive companies should be shitting their pants. It's not Tesla who they'll be competing with and who'll be eating their lunch. Tesla's in a league of their own, just like Apple. No, it's the Chinese EV makers who'll be eating the lunch of Toyota, Volkswagen, Ford, GM, you name your legacy automotive manufacturer. That's their competition. Tesla still, as far into the future as I can see, has none. And once again, just a quick reminder, if you happen to think that Elon Musk is distracted and want to cry out loud publicly about it, I have an idea. Owning Tesla stock is not compulsory. Just saying. And now, your daily reminder. You got to check out Athletic Greens AG1, which I've personally been taking now for more than 2 years, and I absolutely swear by it. If you hate your life, you eat like trash, you don't exercise, you don't give a shit, you don't get enough sleep, you got bigger fish to fry, don't bother. If, on the other hand, you do value feeling and performing your best, and you're not taking Athletic Greens AG1, I think you're missing a trick. Hence, I'm doing my best to try and have a positive impact. I'm always looking for ways to feel and perform my best, and AG1, no doubt, is the best bang for buck. It's not the only thing I do, but in terms of the return on investment, There's nothing that comes close. It's packed full of 75 high-quality vitamins, minerals, and whole food source nutrients, plus digestive enzymes, prebiotics, probiotics, and adaptogens to help you deal with stress. Plus, if you head to athleticgreens.com/SMR or click the link in the pinned comment, you get yourself a 1-year free supply of vitamin D3 and K2 plus 5 travel packs. Try it for a month, and if you don't get the results you're looking for, just get your money back. After all, that's why the money back guarantee exists. What do you got to lose? You don't have to take my word for it. Check out these recent testimonials from viewers of the channel. After nearly 1 month on AG1, I'm less sleepy, have more power until late evening, more attention without being edgy. It's life-changing, positive. This particular viewer is suggesting they feel like they're in their 20s. They're currently 38 years old. I've had a similar experience myself. No kidding, I feel like I'm 20 years old again. And I'm almost the same age as this viewer. After 4 months of using AG1, I have only one problem. I want more. I like bigger scoops and would run low before the next pouch would show up. So today I made a double order. Love your content, thank you. You're welcome. Yet another newly discovered benefit of AG1 is my golf game. Finally got out here on a golf course, don't want to reveal too much personal information. Golf is primarily a test of mental strength and positive thinking and focus. AG1 seemed to have amplified all of these, as well as my body feeling loose, less sore, and less aches in the joints after play. Amazing. A lot of people sharing similar results. It's almost as if you give your body everything it needs to feel and perform its best, which includes recovering from exercise and physical exertion. You get results like these. Been using AG1 for 2 months now. I'm 22 years old. I've certainly gained a substantial boost in energy that helps me get more done throughout the day. Before AG1, I used to work 4 hours in the morning and 2 hours in the afternoon before noticing a substantial drop in performance. Now I'm able to squeeze out 8 to 10 hours a day of high performance work. So in short, AG1 made me 40% better. Decided to buy AG1 a few months back. I have more instances where I just feel generally happy, positive, for no reason. Many other viewers have similar experiences, by the way. Again, if you're giving your body what it needs for optimal performance, it can have a very positive effect on your mood. I don't have anxiety or depression, but I usually get these random spurts of joy on particularly good days, or when things in life just feel right. I was surprised AG1 has made this happen more often. I also had an instance where an AG1 pouch was punctured during shipment. Contacted support chat, and within 5 minutes they said they would send a replacement. No questions, no hassles. The replacement arrived within 4 days. After 3.5 weeks or so on AG1, it accomplished what I hoped it would by getting rid of a very nasty head and sinus cold, and yes, seemed to give me more energy and a little brighter outlook on life. And finally, AG1 Day 60 update. It makes me feel slightly better 100% of the time. Well said. So what are you waiting for? Head to athleticgreens.com/SMR or click the link in the pinned comment. Start your daily health habit now. Try it for a month, see how you feel. What's the worst that could happen? You only feel slightly better 100% of the time. And now I feel, time to use some of that extra energy that I'm personally experiencing from AG1 to create some more exclusive content for both my Twitter subscribers and my Patreon supporters. If you're not on both, you're really missing out. So, see you over on Twitter and or Patreon. Love ya.